Good morning, everybody. It's Jeff Fitzpatrick. It's Monday, the 8th of July, and time for me to record my video blog. So let's get the show on the road. I'm taking a look this week at short-term trades with an example that I used last week using Intel. I think you'll find it interesting. As usual, I've been through the filtering process. I developed a long list with about 150 stocks on. Use the charts and indicators to eliminate about 100 of those. Then the analysis, basic analysis first, and then more detailed. And then for the ones that were left, went into them in a great deal of detail. And I've actually ended up with probably about 10 this week. But before we get into that, let's look at the issue of short-term trades. I'm going to use an example of Intel and Sapphire Club that traded this last week. Okay, so this is the spreadsheet for the Sapphire Club, and there in the sort of center we've got Intel. And what we did last week was sell a weekly call. So it was basically sold on Monday and expired on Friday, and it gave 59 cents. And we actually did a lot of them, 20 contracts. That reduced the shortfall that we have on Intel, took it down to 2,663. So we're still a long way down. We've got $38,000 worth at the current price. 5% of the account would represent 41,000. So there's not much scope to add permanent with this. And the idea of selling it and replacing the stock, we'd be selling something for 32 that we paid $48 for, and we'd probably have to take a huge risk to sell back up there towards $48. Probably just get put to us again and again and again. We're going to have a lot of trades, a lot of costs. So I decided that a weekly trade may be good for this. And it came off. So it was 59 cents. Because we'd sold that for 2,000 shares, then when you add the gain to the 1,200 that we've already got, it came to more than 59 cents. And if we look at the chart for Intel, you can see that it had a good rise last week. It was actually up 2.5%. So we were okay with that. And it's still filling this gap, and the forecast is up there, sort of $40-ish. And the thing is trending upwards. So we may well do it again. Let's have a look what we could get. So remember that the current price is $32.02. So here we are in the trading platform, and we've got Intel in place. We can just see the price there, 32.03 by 32.62. The market's closed at the moment, and we've got weekly options available on this. Now, today is the 8th. I think the 12th might be a bit close. The 11th, sorry, the 11 days is the normal July expiration of the month. So I'm going to go and see a little bit further out, July the 26th, see what we can get. So if we were to sell not a 32, but a 31, it's 100% time value, and there's 89 cents. That's actually 30 cents better than we got with it last week. So that will, again, reduce our exposure on Intel if we go on to sell it later in the day. If we check back to the account, up in the top left there, we've got 77.52% of buying power compared to the account value. So we've got plenty of buying power to be able to do it. So if we do that and the stock price falls, of course, we're going to get a lot of stock put to us, but it's going to be at $31, $1 below the current price, 89 cents or whatever we get through negotiation, further down to that on the exposure. So yes, there's some risk, but it's not huge. The alternative is selling a new put at 46, 48 or something, and having that put to us and having to get out of that again. And that would take the percentage of the account that we're looking to own long-term to a much higher level. So that's what I'm doing with short-term trades. and I've got them expiring now each week going forward for the next 3 or 4 weeks. I was going to talk about traffic lights this week. What I'm getting towards now is looking at the stocks that the clubs are already in and assessing the quality of each of them on the same basis that we'd be looking at them if we were intending to move into them as new stocks. With that in mind, they'll get classified. Green for all is well, let's go with it. We've got plenty of price appreciation to go. We can generate a good income from it and so on. Amber, where we're not so sure, and perhaps we want to consider leaving in the near future. So, the jury is out on it. And then red, where it's obvious that the quality of the stock isn't there, and it's going to be an awful long time before we can actually get money out of it in terms of selling the actual share at a profit. Those we will work towards exiting from to release the buying power to get into fresh new stocks that have got better prospects. The problem at the moment is that the team who are doing the work on putting the data together for the assessment of the individual stocks have fallen a bit behind. It is a big task, and I'm very grateful to them for getting involved in it at all. So in terms of looking for new stocks and developing the long list this week, the new entries, there were basically only 5 of them, there they are, and there were 4 that fell out. Sorry, 3 that fell out. The 3 that fell out were because of either falling timeliness score, so it's now 4 or 5 or ungraded, or safety the same, 4, 5 or ungraded, or the financial standing has fallen below B+. The corollary of that is on the risers, the newcomers, they've either risen to a 3 or better on timeliness and safety, or safety that is, or their financial standing has grown. As it so happens again, although they've got to this first base, none of the new stocks are in the total filtering system getting there. But these ones did. So what I've got here are 13 stocks that have come through the filtering process on quality and that have charts and indicators that look pretty good. They're somewhere near. They're not necessarily good to go, but they're definitely worth watching over the next week or so. Now, I've got some highlights in there. Some of these are not perfect by any means. In fact, I rarely find a stock now that I consider to be perfect. I've got the parameters so tight that I don't expect anything to sort of pass through without comment. So what have we got? AKAM's positive, the beta is reasonable, price to earnings ratio is a little bit high. I'm not happy with 22.5, but nonetheless, it's not awful. Their 5-year shareholder value increase wasn't particularly brilliant, so I'm hoping they're going to do better than that in the future. However, they are scoring a 1, which is the top score out of 5 for management, and their debt is under control, and they're not an expensive company in terms of buying the assets. The price is only 2.48 as a multiple of the asset value, the book value. ALKS is a little bit less good. I've got an orange on that for the moment because of its weak balance sheet and the fact that the management are only scoring 3. Now, 3 is not terrible. 3 is average. And this is also a new parameter, so I can't get too hung up on it. However, I've made it an orange, so something that you might want to consider later in your list of stocks that you might want to go into. However, it's not necessarily a bad stock. Similarly, I've put Comcast into the orange category. It has got a management score of 3, which is not the end of the world, as I'm saying. However, it's got earnings coming up on the 25th of the 7th. So we expect earnings to be announced on the 25th of the 7th. And in general, we want to avoid trading stocks close to earnings. So if it's one that you want to get on with, great, get on with it. If you sort of want to leave it for a little while, then you are getting close to that earnings date. Berry, a little bit of concern. Their debt is a bit high, so that might want looking at. But other than that, it's looking okay. Buckle, no problems as far as I could see with that, and a very good 5-year shareholder value contribution. So good all round Buckle, and it could be the time of year to get in to that stock as it is a retailer. Then we've got CAG. That's got a negative value line narrative report, and the debt is a little bit high on it. So I've made that orange. Now, you need to read the negative report from Value Line. They're not the be-all and end-all. They're not necessarily accurate. However, we might be a bit foolish to ignore it, but you need to make a judgment on that. CNC, that should also be orange because it's also very close on earnings. IMKTA, now the negativity in the Value Line report on that is really based on the fact that the founder of the company still has a fairly large share of it. I'm not too worried about that. I don't know if you are. MGPI, all good. OLN, the Value Line report is pretty neutral, and it's got a quite high price to earnings ratio. So again, perhaps not one at the top of your list. SLGN, pretty positive apart from the debt, which we like to see at 50% of the value of the company is at 77, so a little bit high there. So again, something you may consider to be off-putting. And TAP, which is the brewery company Molson's, again, looking good. Management, their score, which is based really on the shareholder value that they've generated in the last 3 years, whether or not they've got any ownership in the business, and whether they've generated a positive report. So not too bad, it's average. So they're my filtered list for this week. Okay, so if you're watching this and you're not currently a member of one of our investment clubs, have a look at myinvestmentclub.co.uk and decide if you might like to come and find out more about us. You can attend meetings, you can have one-to-ones with me, you can speak to the members on WhatsApp without me interfering with it. You can ask them anything. If you want to get involved, find out more, then it's pretty easy to do. The clubs are doing very well and their performance is improving rapidly at the moment. It's a very good time to join. You can do so for as little as £100 a month. And that £100 a month or whatever you put in actually buys more value than you're putting in. So it's a good deal. We haven't sorted out the venue yet for the November training, but note the dates, 15th to the 17th of November, and there'll be more details to follow. Here's the book, still going well. It's a good listen, I'm told. If you fancy having it, then Audible, or if you want to read it, Amazon, that's great. So, thanks for listening. See you next week.